Vimal, good to have you with us here on Know Your Company. And we would love to hear more about SMOOR's plans. I want to just recap the numbers for our viewers. Grown 120% since last year, looking to achieve a scale of $100 million in annual revenue by 2026. That's a target, and expanding rapidly. Now, you've just raised a Series A from Rebel Foods. Talk to us about the potential and the opportunity for scale you see in this business.
Thank you so much. Yes, see, the brand for over the last 2-3 years has probably has grown at a pace that has also excited us a lot about and given us a lot of confidence. So in relation to that, I think if you go back to it, being a chocolate brand, probably the only a homegrown brand that is at a premium level, or the coveted chocolate and the desserts. We basically, if you look back at it, the desserts, the chocolate, the acceptance in the Bangalore market, and the way strategically we are very focused on an offline concept, because a premium chocolate and dessert brand requires experience. So we were able to achieve that in the last 5 years. We got the playbook right in Bangalore. And during the lockdown, one of the things that helped us was that we saw a lot of customers moving towards an online platform, and we were able to continue the growth. And hence, the package was complete in Bangalore. So for us to scale up, we required a round of investment that we wanted, and then we went on the market. And the timing was right, and we saw a very good synergy with Rebel Foods. Being a very strong offline player, and now we know how it operates through the customers walking through the door and giving them the experience. We needed a platform that we will be able to accelerate. That was probably one of our weak points in terms of accelerating the growth through online. And we saw a lot of synergies with the Rebel in terms of that. The number of cloud kitchens they have had across the country, the type of customers, the premium nature, and they were covering a lot of areas where the customers are probably the same type of customers that we look for in terms of the spend and the demographics. So that excited us. And and from their point of view, they were also quite excited about the offline platform and offline experience stores. So it made a lot of synergies to close the deal with them. And then not only that, having the presence internationally across Middle East, UK, and Indonesia. This also sort of gave us a little bit of a kickstart to what the journey we're looking to go abroad as well. So that's where we sort of come together and have closed the deal to move ahead.
Exciting. And I know that, I don't know if you'll shed some light on this, but I think some articles have said the valuation of the deal is about 50 million.
Yes, it is upwards of a $50 million valuation. No doubt about that. And it's something, I think it's a fair value right now to the way the brand is sort of accelerating the growth. And, it's been about a 6-year journey so far. And that's, it's valued around that. Yes.
Okay. So interestingly, you said a 6-year journey. In the last year, we've seen 120% growth. What's leading to the flip? Is this, particularly to do with timing, market, product? What's led to the flip? Or have you been seeing this kind of run rate all along?
I guess, the first 3 years, for us, it went about building the brand and getting our systems right, our product right, and then getting our store designs, etc. So generally in a startup, 3-4 years it takes to settle the team, settle the product, the manufacturing, etc. So were we expecting this type of growth in the last 2 years? Probably we were not expecting this significant aggressive growth. But with the COVID lockdown, it allowed us to expand a little bit faster, and then we were able to also do in during these last 2 years. Where the growth has come from is fundamentally it's come from that we have opened new locations. Along with that, we've also covered many new geographic locations through cloud kitchens in Bangalore itself. So between both of them, the growth has come. And then we've also started seeing in the last 12 months also the business bouncing back in the offline. So when I guess if you look at it, the business went from an offline shifted to an online. Then when the economy and the lockdown became over, and then COVID sort of started to dilute and offline business becoming stronger. What we saw was that the offline business picked up, but at the same time, we did not lose any of the customers that shifted from offline to online. So online literally became an incremental growth for us. So
That's
that's why
interesting.
the growth, yeah. So that's why the growth rate is a bit higher. And then also it was easy for us to also plug and play some of the new locations faster because there was availabilities of locations that suited us, and then we were able to take those locations and quickly
Okay.
turn it on.
So it's such a unique kind of concept. I say unique because we don't have, like you said, too many other homegrown brands of this scale in premium chocolates. So what do you think worked for you, Vimal? Is it positioning? Have you managed to crack the kind of premium positioning to price ratio or model? What really do you feel has worked for the brand?
See, as far as the two things for us that really has worked for us is being a full stack company. You are able to source the raw materials, which are the quality ingredients that we were able to import from Belgium, abroad like Singapore, etc. So what worked for us was that we've been a full stack manufacturing, a gourmet manufacturing plant. We were able to source the materials, manufacture the products that probably suited the palate of Indians much more, and at the same time are able to not compromise on the quality. And we're able to also do a lot of new products very fast. Be occasion gifting, be celebrations, and those things were we were able to adapt much faster and able to launch products quicker. That probably helped us a lot. And if you look back at it, most of our chocolates that you see on the market, they are literally branded products that are imported.
Okay.
And what we did was we were able to match the quality, but we were able to get better variety. And then also our pricing strategy helped us, because obviously it helped us on a couple of reasons, because when you import chocolates from abroad right now, the duty is extremely high. So that allowed us to also have our pricing strategy, which was probably a little bit lower than the imported chocolates.
Okay, so given what you're telling me, and this is your first fundraise, do you anticipate the need for future rounds within the next couple of years, the next year? How are you poised in terms of run rate, and would you be extending investments also into manufacturing, more facilities, more setups for manufacturing?
Yes, so this round of funds will allow us to also put up a new manufacturing line that is required, because with the new round of funds, the growth number is gonna be much higher than what we anticipated. Since we are also gonna be getting into Mumbai, Pune, Delhi, Hyderabad, and Chennai through offline, as well as we'll be scaling it up through the cloud kitchen model. So back end, the capacity, production capacity had to be increased. So this round of funding, there's a certain part that we'll be using it to put up a new manufacturing plant in Bangalore. And along with that, we'll be using it purely for the growth, which is on investing into new store locations, be cloud, kiosk, or flagship stores, and also aggressively sort of pumping money through marketing in new geographies. And so that should cover us, and should that take us to probably the revenue. We should double the revenue in this coming year from last financial year. And then, yes, in terms of the next round, we will probably be anywhere from 18 to 24 months from today. We will be going for the next round of funding to accelerate the growth even further.
Fantastic. Great speaking with you, Vimal, and we wish you all the best. Look forward to staying in touch here on Business Today.
Thank you so much.
If you like the video, do like, comment, share and subscribe.